Hello, Michael Hopkins, Seeking Alpha. I'm with Jennifer Warren from Concept Elemental. It's a new year. We're starting with the new year. Markets are, at these highs, and not only just focus on what happens next with markets, but in your area of expertise, there's energy going into starting 2024. I'm sure there's going to be um, lots to talk about this year.
Yeah.
And I also know that you've already been busy already. You've
Yes.
been crossing the country, you're attending conferences. What have you learned? I guess it was also not just this year, but I mean, a little bit last year, end of year last year, last time
Yeah.
we talked.
Yeah. I mean, definitely things are recycling back from things we even talked about. I mentioned that I've been to 12 conferences. Three of them were Fed conferences, two were energy, one was tech disruption, economist conferences, investor conferences, blockchain crypto conference, which was really interesting. And so I've really been deep in the weeds of, what's going on. And to continue, next week, I'm actually going to a conference in Houston, energy, and it's going to be all upstream and it's going to be all the innovation connected to resources and all that stuff. So yeah, keeping busy, but yeah, I know that you were asking a little bit about what I've kind of learned from what I've been doing and put, synthesizing it. And what I can say is, there's definitely more data and information related to the challenges of the energy transition, as it's commonly called. And also the requirements of big tech related to energy are starting to show up more because a lot of the big tech firms, they want to site solar and renewables near their data centers and this and that, but there's only so much you can do. There are limits to that, and we're starting to see a little bit of that about reality. That you've got to have this reliable base load. And that relates to big tech. And then the other thing too, I would say is, with what we've seen with some of this IRA legislation, which we started talking about the end of 2022 when it first came out, and we continued talking about it all year last year, is that there's a lot of spending that was happening, but it was not necessarily the highest use, and that's reflected in some of the stock. And we'll get to that when we screen share. But I also did this video, the last video I did called After the Fed, Hybrid World, Circular Economy, Capital Market Liquidity. And there's a lot of detail in that, and that'll be in the article coming up. But what it'll show is what the IRRs are on fossil fuel projects versus a lot of the energy transition projects, which is really interesting. And I got this from a Fed conference in November, a Fed energy conference. So we'll have that as well that you can look at. I've also, I've been in the weeds enough where I'm seeing a lot of private development, private investment, and how and when it will maybe become public. So kind of those transition spaces, which is really interesting. The other thing too, geopolitics underappreciated as always, especially with this all the election noise. What's going on in the Middle East? Huge. Russia, huge. China to do with green energy transition, huge. And that policy can very much distort all this and confuse people. There's a lot of noise in the media about green tech spending is 1.2 trillion. Bloomberg just said half of it's China. That's huge. That's policy driven, and then we're following behind with some of that, which is fine. We're like 300 billion last year. But it can create distortions and it can confuse really where the investment plays make sense. So those were a couple of the learnings. And I've got some more that we can cover in a minute, but I think you had one more question before we
Well,
screen.
yeah. Yeah, just some of the key takeaways as you look ahead. I mean,
Yeah. So some of the takeaways are that, fundamentals are still key. And especially with this election noise and triple Q noise and the big tech noise, we're starting to see a little bit of the air coming out of some of that, I believe. And, I just think we're getting even, I talked about a reset last year after my, like in the spring, I did this video, like reset, rebuild, regenerate. And I think the reset is still happening. We are resetting, you know. And that also the other takeaway is reliable energy is key, critical, underappreciated, and that's base load. All the green stuff, brilliant, but you've got to integrate it on the grid. And there's a lot of headwinds, and Texas is a poster child. And next time we talk, we'll talk about that, because I'm going to be listening in on a Texas economy Fed presentation in another 10 days, and I'm going to have a lot more color just about some of that, and that you know this talk about isolationism, whether with America and elections and all that. And, our markets are undeniably linked. Global markets are undeniably linked. That ship sailed. It's not going back. It's in energy. It's in tech. If anything, and in spite of reshoring, and that's happening, it doesn't mean we're any less integrated. It just means we're shifting things around that makes sense, for all kinds of reasons. And so I think that's another one of my takeaways. So did we want to screen share now and look at
Yeah,
some
I
of
think
the
we want to look
slides?
at the slides here.
Okay, yeah. Um, Okay, so again, been to a lot of conferences, and how I would sort of characterize things from a 30,000-foot level. Can you see me? Where am I?
I think you're at the top there. I see you, and I see the
Oh,
chart as
okay.
well. Introduction.
So, basically, the energy systems are a mashup of centralized and decentralized approaches. We're seeing some more decentralized approaches emerging, based on the region, resource availability, and policy and financial resources. And what I mean by that is, for example, in Texas, um, like with a lot of these industrial users, these big industrial users on the Gulf Coast and in hospitals in San Antonio, you'll see them starting to have some of their own microgrid action, so that they don't have blackouts, especially with these grids, they're trying to integrate a lot of renewables, so that there's that reliability. So that's kind of, something else to take away. This is just from the Oklahoma Fed. It's really cool. It's their downtown area. But one thing I'm going to just say about this, if you look at these baseball fields, in the city behind it, these cities were built off fossil fuels. You know, I mean, that's a staggering thought, right? So in terms of hydrocarbon drivers, we're still like 100, we're at 102 million barrels a day, just real small growth from a large base. It's still growing. Supposedly China is supposed to grow with oil demand up through 2030, and then India could be 2030, 2040s, even on with their oil demand. Just, that's the projections. Whether it happens or not is another story. Again, Middle East conflict, number one risk. And I think the thing that's also underappreciated with what's going on is, years of economic setback are happening. Look at Ukraine. Look at what's happened with Germany because of Russia, Ukraine, and the impact of energy on the German economy. That there has been some flight of industry and investment shifts because of it. So these disruptions are uncalculated. I mean, there are opportunity in the future for rebuilding, but for now, it's just disruption and uncertainty. And then also something I'll note really quick is that the Saudis are throttling back investment. They just announced it that they're not going to build new capacity. They're kind of going to hold tight where they are, and I think it's like 12 million barrels a day. And then this, I'm just noting this because I just want to show you. So this blue line is OPEC outages, and the red line is everybody else, including us. As you can see, oil production in the Middle East, it's volatile, right? And so we help smooth that market. So that's why it's really important that we are the hydrocarbon producer that we are, including LNG. And this is just looking at the US role. So the blue here, 15%, and this was of May last year. Almost 16% of global production is us, United States, Saudis, 12%, Russia, 12%, other 12%, Iraq 5%. And I think part of why Saudi Arabia is saying, we're going to hold tight is, they have enough spare capacity. There's also other areas coming online, some like Brazil. We've talked about that a lot before. And so they're just kind of being conservative, and also they want prices to stick. They don't want prices to go down. So there's not going to be that oversupply. So that was kind of a signal. On the natural gas front, as you can see, this red line is that we're exporting more via LNG. We really saved Europe with our LNG exports. They count on us. And this recent, announcement by Biden is a bit counterproductive and highly political. They're going to be, sort of staying some of the licenses for a little bit. We're still, we really have a lot of natural gas. We're not going to run out. And this really gets at what's going on around the globe. So if you look at this, okay, so the top here in the red, and then these yellow and everything, these are liquefaction plants. We're the ones here, North America's at the bottom. We're the ones that are exporting. It means we can export LNG, all these countries. Look at the regasification terminals, the ones receiving LNG. It's Asia, it's Europe. And they have a lot of capacity planned in the future to receive LNG. Well, that should be us. And we're big players there. And even if you look at this map over here, we're exporting, and look at, and the darker is all the importing, the regasification also. So I just think that gives you a view of the globe of how important our LNG is. And I think for the short-term gain of that announcement, I think that it's really counterproductive, and I think it sends the wrong signal, and I think it just adds uncertainty where it's not needed to appease a small group that really, it's not gonna, it's not needle moving, and it's not practical, and it's not even economics. So on renewables, 35% growth from a low base up to 2030. The headwinds are always critical mineral supply chains, with China 2 decades ahead. The other challenges, like I mentioned, grid integration, last mile challenges. And this last mile challenge, I will relate this to EVs. As we've seen, there's been announcements about basically slowdowns of EV investment and purchases and all that. And, that was really going to happen for all kinds of reasons. And this one professor that I heard from back at this Fed Tech Disruption Conference in the spring, and there's a lot of videos on all this in a playlist called After the Fed. He said, we could get EV penetration up to 10% of sales, but after that, getting to 20 is hard. It gets harder after that, and we're seeing a lot of it, coming to play now as to why they're challenging, and I won't go into the details. The other thing that's really interesting is related to electrification, which is in demand. Electrification in demand globally. But in the United States, the connection times are really long. So we have those headwinds about, getting that supply online and integrating it. So that's TBD. And then this just shows you, here we have renewables here in 24 going way up. And that's largely, were it not for the IRA legislation, you would not see that chart looking like that. That's just a projection, and that does not mean that it's going to be reality. And yes, coal's being replaced, but here's the thing, people say, oh, great, let's add all these renewables. China's adding renewables, Europe's adding renewables, but they're also adding coal. Coal is dirtier than natural gas by a long shot. So that is backwards. That's not gaining, to reduce carbon emissions and pollution. Now, these are some charts that I just pulled up. And so this one is just showing, so SMH has NVIDIA as its top constituent. And here's NVIDIA over here. I broke it out. It's the purple line. And this is a year. But SMH has Intel and everybody connected to semiconductors, just FYI. And here's triple Q is in there, S&P up, XLE down, iClean really down. And that's what I was saying about, with interest rates rising and the bar being higher for a lot of energy transition type stocks and things, it's gone down. And XLE has been down too because oil prices have been lower and there's just been, headwinds. Now this is 6 months and, little bit coming more down to earth than a year ago. And Exxon is still down because at this point, oil prices had been low. Energy Transfer, though, cruising right along, steady. And that's kind of the memo on the next charts too. Energy Transfer has been remarkably steady. And that gets to, something that I'm going to talk about in a little bit too, just about, investment thoughts. But AMSA is the midstream ETF, and it's also kind of mirroring the performance of Energy Transfer as well. And what that announcement about Lake Charles, with the LNG, Biden LNG stalling, it doesn't really hit ET stock that much. It's just future growth. But obviously we want that facility to go forward because it's a brownfield site that's been repurposed. So it's a highly efficient use of old infrastructure. Now this is a month look. And again, Exxon's coming back up. The price of LNG and EQT natural gas stocks down. Chesapeake got a bump, and they're also merging with, they bought Southwestern. So you see that consolidation theme continuing in oil and gas. This is 5 days. And partly I wanted to show this. You've got LNG and EQT. Here on the 28th, this is kind of like right after that announcement about, LNG terminals, being the licenses being, held back and all that. So that was the response. But then they've kind of gone back up when the market has digested that news. Again, you see Energy Transfer, AMSA, Exxon, all of them just cruising along because, it's just the fundamentalness of it. And so I think there's, I think it's still underappreciated and it's going to cycle back as it always does. Now I'll stop sharing. Okay.
Sure. I mean, great slides again. Uh, so as you developed, have you looking at all this and then what we're looking for in 2024, what have you developed any investment ideas from what you've learned so
Yeah.
far?
So I would say, compared to last year at the beginning of the year when I sort of had this, um, deglobalization, clean energy, and that which can keep up with inflation. That was sort of the thoughts, and infrastructure was in there. And I was looking at energy transition things, but I wasn't convinced. But some of it feels like a rinse, repeat, recycle, of last year. Except I would say, though, to me, the things I'm looking at really are resource efficiency. And that is really reflected in firms like, okay, Exxon, bought Pioneer. That's a $65 billion investment in resource efficiency. Exxon bought Denbury,
Mhm.
which is giving them all the CO2 pipelines, and potentially, they can have some enhanced oil recovery, EOR in the future. So I think you're seeing this, how do we do this? How do we produce the hydrocarbons smartly, more efficiently, and at scale? And so there's been a ton of consolidation. I calculated between Exxon, Pioneer, PXD, Chevron, Hess, Chesapeake, Southwestern, Exxon, and Denbury, $140 billion of announced and planned acquisitions. just within the last year. That's a lot of value, you know.
Mm.
And then if you, and then, and just a little sidebar, BP, you know, they just got a new CEO, and you know, we kind of talked about BP at the end of 2022, you know, noting their, you know, how the market wasn't liking their direction. Well, they now have a new CEO, and he has said that of their 14 to 18 billion of capex, you know, coming up, that 50% will be spent on fossil fuels. Now, that's still a little bit low relative to others, you know, other majors. So, and I haven't looked at their stock to see yet what that's looking like. But that's kind of interesting. And then the other thing that was notable, and this is something I'm kind of looking at, is just infrastructure opportunities. And I don't care if it's hydrocarbons or clean energy or whatever. Infrastructure that's smart, that matters, that's necessary, matters. And so that's something I'm looking at increasingly, just because with some of this reshoring that you're seeing and certain supply chains coming back to the United States, um, they lend themselves to infrastructure opportunities. And I'll be talking about that more in the future, because I've got a feature coming out in April, May, and that's where I'm going to start really, you know, integrating some of my investment ideas more. But the other investment theme to me is really just big macro, and that's kind of, you know, back connected to the reshoring and infrastructure opportunities, and that can be LNG, that could be, you know, industrial infrastructure, that can be industrial hubs like the Gulf Coast, and also data plays are interesting to me, how they're going to, you know, with AI, with quantum computing, with the demands of all that, you know, what are some, you know, little nook opportunities of people doing things smart as it relates to, you know, tech and energy and all that. And the other thing I just wanted to note before I forget is just, you know, I've been paying attention, like I said, to semiconductors and chips and all that. And the expert that I listened to last spring, and that's in my Fed playlist, talked about how, you know, we're hitting the limits of Moore's law, which just means basically that, you know, getting chips smaller and smaller and being able to do more with it on a chip is, it's reaching its limits. And so then it becomes more inflationary over time, you know, you know, to do things differently, to innovate. Now there's going to be innovation that's efficient too, but it's just that, you know, there are natural laws and laws of physics and laws of math that just happen, and you can't rush, you know, butt up against them. They're absolutes, and I think that's kind of what we're seeing with some of those developments. That, you know, the Samsung plant that was going to be $17 billion is now estimated at 25 billion, and it could go higher. The small scale nuclear reactors that have been in the works, you know, they were trying to get them down to like 55 megawatt cents or something, and they're double, you know. So there, you know, so with a lot of the innovation comes inflation and cost. And so I think in some respects we get ahead of ourselves, and I think that's a little bit reflective of the Magnificent Seven and the Triple Q, and, you know, the hype, right? So I'm trying to be really grounded in my thinking, you know, and just try to cut through the noise, and, you know, really be really pragmatic about my investment choices, you know, given some of the natural limits of things. So.
So let's go to one point that you brought up in that conversation, and that is infrastructure opportunities. Is this going to be something that's going to be M&A, like acquisitions, or is it going to be like these companies having to spend money to build the infrastructure that they need?
Yeah, I think there's acquisitions and there's money spending. I just saw that, you know, I just glanced at enterprise products, you know, that they're going to be spending on infrastructure in the Permian, because, you know, there's still a lot of runway in the Permian. And so, and especially with the Gulf Coast and, you know, all that exports. So there's spend, which is growth, but it's slower growth because these are really large firms that are laying out these mega billions, right? What was the other part of your question? Oh yeah, acquisitions and spend. But also, for example, I know that I think it was BlackRock bought the ticker is GIP. I can't remember what it stands for, but it's an infrastructure play basically, and so they bought a lot of assets because they really and so they're consolidating, right? So the consolidation is interesting. Again, that gets back to efficiency, right? But then what are the growth areas? So I think Blackstone in doing that just sort of like integrated this infrastructure play, because there is that need to consolidate, I think, on a lot of it too. As we consolidate old infrastructure and then build new infrastructure for the future, because these assets wear out, right? There's an infrastructure stock turnover that happens, and and those assets can be 50 years. They're long-lived assets, so and they're expensive depending on what they are. And so that's really, really interesting. And I did a lot of research and analysis on capital costs of infrastructure back with a professor. We started in 2005, and I spent like almost 10 years doing a lot of deep work on it. And now I'm kind of coming back to that, and I'm merging it with some of the oil and gas upstream, just kind of trying to look at it more holistically also within the energy transition. And then let's just see the other thing. So I mentioned the deals, um, but I think discernment is a big key. Investment discernment and seeing through the news of the election illusion missed, because it sways things, it sways markets, it sways geopolitical foes, and so I think people need to be really mindful of their messaging, you
Yeah.
know. Because America
So,
matters to the rest of the world, and what we do and our investment and our sensibilities, and our energy. um,
well, how are you viewing and sorting that the trends related to energy and innovation?
well, I mean, I think they're kind of bubbling up, right? I mean, I've had to regroup the thinking of things like just what I mentioned with infrastructure, looking at things from a really 30,000 foot, level, and then coming down back in at 10,000 feet. But also for myself, that's why I go, boots on the ground, do a lot of things so that I can see what is happening, and what makes sense, and talk to the people doing all these innovative, microgrids, and, and what's the thinking in terms of, oil and gas efficiency and all that. I'm going to get a big eye of that, in a week, and just get around a lot of the people doing the operators, So for me personally, and that's just something I can do, right, because of what I do. And so I try to just filter that into a thesis, and I think that's what's coming. And I think that's why I'm picking infrastructure and resource efficiency, macro, because of the geopolitics and the election. I think there's a lot of, you know, like I said, a lot of mist that has to be kind of blown through, and, put some headlights on things, you know. Um, but
Yeah, I think that's all great. So I guess to wrap up here, you're going to go, you've got some conferences you're going to. Houston is coming up here shortly. Any other, I mean, not only conferences, but some of the other things you're looking at in terms of what happens here in the spaces that you cover
yeah.
for the,
Well, one thing that's been kind of interesting to me is, like, I mentioned that I've been to a blockchain summit, and because all that is tech, right? And it integrates in with all the big tech. I mean, obviously it's a subset in some respects, but it includes crypto, and Bitcoin miners and all that, and they're energy users, and I'm going to be with a lot of them next week. And so I keep looking at all these sort of crevices as well, and I bought some Bitcoin mining stocks, some miners,
Wow.
and things like that. But so I'm kind of, looking at all these little nooks and crannies and crevices of opportunity as well. And I suspect I'm going to be going to a lot of similar conferences and seeing what's new. Now, the one I'm going to next week is a different one for me because it's really upstream. It's upstream. It's really nitty gritty, of the producers. So that's going to be really interesting because I think there's going to be more, talk about tech and all that kind of stuff. And then Sarah Week, I'll probably go to that and go hang out with the Canadians. And and then whatever comes up next, I'm again keynoting in Montana in the fall, Middle East conference, and a women's conference session that I'm delivering. So I'm working on all that. So that's why I just, keep boots on the ground because, I'm presenting as well. I'm going to conferences, I'm listening to others, but then I'm putting my own, observations into play. And I always look at capital markets, where does the rubber meet the road on this? Because you can talk about all sorts of cool things, but it's where you put in the money, in the end. So.
So there's just a lot to think about. It's a new year. I'm sure when we talk throughout the year, there'll be stuff that we didn't think about here in January that we're going to be talking about later on in 2024.
Yeah, definitely. Like I didn't think that the inflation, Moore's law, all the chip,
Yeah,
intel was going to be like real and true, 6, 8, 7 months later, it's really playing out in the real world, what this expert said, so that was really shocking. And then an AI, generative AI, all that, and that's, we've had a little bit of the air let out with that too, because, there was a
yeah,
new study by MIT and it is what it is and it's not more than it is. you know it's just another thing.
yeah.
um so
Again, I mean, what else could we be talking about, throughout the year? It's going to be interesting to see where
yes.
the discussions go.
Oh yeah, with I know it's gonna be fun. It'll be fun to talk about.
Yeah.
So sounds good. Okay, thanks,
Right.
Mike.
Well, yeah, I appreciate the time. Thanks again.